I helped a real estate investor raise over $3 million in capital across two funds over the course of 12 months by making these very small changes to his sales process that were very, very basic and very, very simple, but they got people to convert faster and also to put more money into his funds. Hi, my name is Kajana. Most people call me Cage. I run an org called Powered by Aloha. Basically, what we do is we identify the bottlenecks stopping a business from scaling, and then we eliminate them. And then by eliminating them, you can scale your business up the next day. We typically focus on businesses in the $1 to $3 million range, but we have clients as small as 500,000, 200,000, 100,000. We have one client who does like $40,000 a month. Sorry, $40,000 a year. And on the other hand, we have clients that do like $360 million a year. We huge range of business, and it's all the same thing. Like, what's the bottleneck? How do we solve it? Now, in this video specifically, if you are someone who is in the fund space, you raise capital from people and you use those capital to invest into opportunities, private equity, small business, so on and so forth. This is for you. Now, of course, if you're not in those things, this is still super valuable for you because we're going to be talking about a very core sales function that people often don't think about. Particularly when you're in the less than 1 million range, because you're just like, I'll take any money or any lead that comes my way. But this very simple thought process will allow you to get better qualified leads who actually want to put more money in, or to pay more money, that is, as well as getting them to close faster, as well as getting them to bring more people to you so that you are able to maximize the number of leads and sales opportunities per person that you talk to, which is very, very valuable. So with that, let's jump into it. So like always, we always do our fact finding first. So one day I was having lunch with a friend. Well, friend was a strong term at the time. We were like acquaintances. But we were having lunch, and he was telling me that he is struggling to raise capital for his fund. And I'm like, okay, cool. Tell me why. He's like, well, right now, all my leads come through networking. Leads from networking. I'm like, okay, that's cool. I mean, it's a very common thing in this space. It makes a lot of sense. So I don't think that's in and of itself is a problem. He's like, well, it's not. Part of the problem is that right now it takes him 3 calls to close someone to get the capital commitment. And I'm like, okay, so that's, that could be not too bad if it's like 3 15-minute calls. He's like, nah, bro, it's like 3-hour long calls. So it's 3 hours per lead. And I'm like, okay, that's kind of a long time. But then I'm thinking to myself, well, maybe you're raising like, a million plus per person. So he's like, no, I'm actually raising around 200K per person. So I'm like, okay, so what you're telling me is that you're going to spend 3 hours talking to someone and you're going to get 200K out of them. He's like, that's correct. I'm like, okay, cool. So then when you're doing your funds and you're trying to raise, like, what's your target number? He's like, oh, well, so typically when I'm looking to raise, I'm looking to raise about $1 million for the fund. And I'm like, okay, so that means you're only talking to 5 people. So you're only spending approximately 15 hours talking to people in order to get the money. He's like, yeah, but not really. He's like, no, that's right. But what's happening is these 3 calls are happening over the course of months. I'm not getting them like back to back to back in weeks. I'm like, okay. So basically what you're telling me is that you're taking 3 calls broken up over the course of months in order to get this capital raise that you're getting at 200 per person in order to get $1 million in your fund. And he's like, that's correct. I'm like, okay, that makes a lot of sense to me. So I asked him, okay, so obviously not every single person that you talk to is going to be able to make that commitment, right? So like, what's your actual like number of calls booked to qualified leads show up? He's like, well, for every 10 people I talk to, 3 of them are qualified, and I'm able to get one of them to commit. So then I look at that and we do the math on that because it's super important that when we're making these kinds of decisions, we put the math on so none of this is subjective and we can actually look at the value of it. So I'm like, okay, so if we look at the math, what we're saying is that you're going to get 200K from one person, 200K from one person. Then in order to get to your one person, you need to talk to 3 people, or 3 qualified leads rather, which then means you need to have 10 calls. So that means in order to get to your million, you need 5 people, which means 15 qualified leads, which means that you're going to be doing 50 calls. And again, this is not like, because of I don't know how much you know about, capital raising stuff. This is not like on a consistent basis, right? This is over time, over months, potentially even quarters, we're going through this process. So he's like, yeah, pretty much. I'm like, okay, one, that fucking sucks. Let's not do that. Let's make it way, way tighter. And for context, like I said, this guy wasn't really a friend. He's more of an acquaintance. He was a friend of a friend, and the friend introduced us and wants to have a conversation. So in this lunch, we're having this conversation. I'm kind of mathing this out on a napkin as I'm walking him through it. So I said, okay, cool. So walk me through. Oh, so first, here are the numbers, right? Here are the facts. And if we math it out, he would need to have 50 calls, or not even 50 calls, 50 leads in order to have 15 qualified people in order to get his 5 raise, or 5 to commit capital, which he was getting for $200,000 was his goal in order to get $1 million for the fund. Those are the numbers on that. So with that, I'm like, okay, cool. So let's kind of like really break this down. Like, what's the actual problem? So on one hand, I'm like, okay, the problem could be that it's taking too long. And by that, I mean the amount of time it takes to get those conversations going over the course of months is a really long time from my perspective, right? On the other hand, I'm like, well, what if we just say that the leads are broke? What if instead of getting people to raise 200 grand, we can get people to raise, you're raising 500 grand, which by the way, we were not able to do in this round. We were able to do it in subsequent rounds, but in this first round, we were unable to do that. And I said, okay, cool. So then easy. Friction. There's unnecessary friction in this process. And he's like, tell me more. I'm like, okay. So you're telling me it takes you 3 3-hour calls to get that person to commit, right? He's like, yeah. What if we could bring that down by making some adjustments in order to go over fact patterns that people consistently have to address those before the call? That way, if we, quick side note, one of the biggest things in sales is the more objections you can handle before you hop onto the call, the less selling you have to do. Now, a very key point is we call them obstacles versus objections. When someone says it out loud, or rather when a sales rep sells it to you out loud, it's an objection. If you answer before they even say it, it's an obstacle. Now, the reason that differentiates is very important is we have to go through objections together. I, sales rep, have to talk to someone and explain to them the objection. But only you, salesperson, the person being sold to, needs to overcome an obstacle. If I can call out the obstacle before you get to it, it's no longer an obstacle. We're done. Now, with that being said, so I'm like, okay, so looking at this model, let's look at some funnel changes we can do in order to decrease the friction so that instead of spending 3 3-hour calls, even if we were able to get down to 2 3-hour, instead of spending 3 calls for a total of 3 hours of sales calls, even if we can get down to 2 calls, or if we can get it to be 1 or 2 or 3 30-minute calls, or we're able to get it from being over months to the course of weeks or to the course of days, any of those adjustments would make a huge impact on the way that you're able to do this entire business model. So I'm like, cool, so let's go and look at the actual funnel for how you're doing this. So I come down here. So I'm like, okay, walk me through what you currently do. He said, okay, so I have, that's not what I want to do. So he says, so what happens is I have people, I meet them at networking events, and then I'll talk with them. And then from there, I will book them onto my 1-hour call. Then from the 1-hour call, I will send them over all the due diligence materials. And then I will, that should actually be this color because now we're in the selling process. I send over due diligence. That being like, who is he? What's that worth? What opportunities are worth getting into? Then I will schedule a follow-up call. And then after that, I would do a follow-up 1-hour call down the road. So it looks something like this. Okay, so easy. Let's just connect those real fast. And then I'm like, okay, that makes sense to me. So then so let's kind of look at this funnel from a step-by-step process. So you meet them at a networking event, and then you tell them, let's have a conversation. So then you send them a scheduling link. What do? He's like, oh, so what I would do from here is I would immediately book them onto my calendar. I'm like, okay, that's a smart one. So then how do you know that they're qualified before they show up to the call? I was like, oh, well, I kind of figured if they're in the network, or they're one of my people that I'm meeting around and about, then they must be a good fit. I'm like, that could be a problem, but I see where you're going with this. Then I'm like, okay, so tell me more about what's the due diligence versus the 1 hour call. He's like, oh, well, the 1 hour call is usually more of a know me, like me, trust me. And then I'll send them the due diligence deck around the opportunities themselves. Then after they review that, we'll then hop into a call to review the deal together. And then along somewhere down the line, I'll follow up to make the commitment. I'm like, okay, I understand where you're going with it. And I'm like, that's way too long and way too complex. Let's really simplify how this thing works. So I said, okay, so you're going to continue to do the networking events because that's already your primary traffic source, and we're not going to change that because we don't want to add in new things here. This is already working for you. But what we're going to do instead is you're going to send them a link to chat with you. And this is like when you're with them in person. This is not like let me send you a link afterward. I'm like, no, like right now, let's go and send a link and have a conversation right now. Then what we would do on that link is on that link, we had a very basic intake form. And what I told them to do is when you're going through it, you're basically going to go and you're going to ask them these questions as they are going through the process itself. So you're going to send them the link, hey, look, man, so are you an accredited investor, XYZ? Now, just for a quick reference for everyone who's wondering, and if you want to implement this into your own business, so obviously you need to be an accredited investor in this. If you don't know what an accredited investor is, I'm not going to explain it to you. Go and Google it. So after the accredited investor, the next question we ask this to sort them out is, what available cash do you have available for investments? Because we wanted to see, like, if someone says they only have $200,000 in total, then not that they couldn't invest into this, but they'd be a lower quality lead versus someone who's looking to deploy, $1 million plus in total in terms of investable cash for opportunities. So we would have them be sorted out based upon that. After that, we asked them, what type of, can you please, there's a drop down list, please select all of the type of investments you currently have, because it would give us an idea of their risk profile of what they want to do. So, from stocks and bonds, T-bonds, to private equity, to like STRs, short-term rentals, to like own real estate, to like multifamily property, to like oil and gas and so on. We just put like a bajillion different options, and they just selected what they have. It helped him to better shape up in his mind what their risk profile was for opportunities and so on and so forth. Then the next thing we asked, because there's actually two more things. The next one is, in an investment, what time frame are you looking for a return? Because again, this would put into mind how good of a lead are they? Because if someone says, "Oh, I want to return next week," there's no way that this is going to work in a real estate investment. I mean, sure, you could technically do wholesaling, but like no one does that. That's a fucking stupid. So we said, hey, what's their timeline for a return? Because then if they said anything, it's like 3, 5, 10 years, we know they're a good fit for this vehicle of investment. Overall, it really qualifies them. And then the last one is, and the last one was, what kind of retirement do you have? Like, what number of retirement portfolios did you have and amount of money in there? And the reason this is important, I don't know too much about this one personally, but it's something around tax advantage activities, blah, blah, blah. I really don't know, but that was what we had on the form. So, intake form, those 5 things. And of course, like, what's your phone number, first name, last name, obviously. So we did those, and then he would walk through those as he's talking with them, and he would put the information in, and he was okay, cool. So like, what would work for you? When can we talk? And then they would say the date, they look at their calendar, and he'd book them right there. He would do all the booking right there with them after having taken them through the entire intake form. Then what would happen is he would then say, okay, cool, so awesome. So what, due diligence. So then they would land on the page and say, okay, cool. So here's the due diligence deck that I want you to review prior to our call. And obviously he's a networking event with them, right? So he's like talking with them, like, hey, here's the due diligence deck. This is gonna cover all the questions people always have. Is the 10 most common questions people have about me, my firm, my approach, all that stuff. I want you to review all of that before our call. That way when you show up, we can really talk about your unique profiles, situation, desires, so on and so forth. They're like, okay, cool, thumbs up. Then obviously they leave that networking event. Now, maybe they do review it, maybe they don't review it. So what they would do then is 24 hours before the call, he would resend the due diligence deck saying, hey, and this is all, now at this point we're talking about automated activities because he was using white label version of Go High Level. So we just had everything built in Go High Level. Like, hey, resending you this deck to make sure that you are able to watch it. By the way, I also recorded this very brief 5-minute video walking through the deck with you. That way you were able to jump on and be fully informed. Then what we would do, they would show up to the call. Then they would show up to the call, and when they're on the call, he'd like, great, did you get a chance to review the due diligence deck? If they said yes, he'd say, awesome, let's get into it. If they said no, he said, cool. I'm gonna pull it up on my screen. Let's review it right now. I'm gonna walk away and do something else, and I'll be back before it's done. So then he would pull it up on the screen. He would play it. He would mute himself, and he would stand up and walk away. Now this is super important from like a buyer psychology perspective. When he would play this video for them on the call and leave, it basically psychologically allows people to feel like they are consuming this material at their own pace and not with the pressure of someone who's like looking over their shoulder like, are you watching this video right now? So by doing it that way, we were actually able to get people to watch the due diligence video right there on the call, which would answer all of the primary questions. Again, objection versus obstacles. It would handle all of the obstacles that they would see around this opportunity before he would even start talking with that person. So it made the conversation more customized to their experience and less about who, what, when, where, why, and that kind of stuff. So they show up to the call, and then they would either route into let's watch video now, let's watch video now, versus I already watched it. Boom. And then what we were able to do is because of this, because we did all this before the call began, this became a 30-minute get to know me call, which is already down from 1 hour, which is huge, right? So this became a 30-minute get to know me. Like, what are all the questions? What are the returns? What are the things you want to know? So on and so forth. Now, I'm not going to get too much into the specifics of that because I am not SEC trained. I don't do funds in this realm, and I don't want to misspeak, and then someone tries to come and sue me. So I don't really want to talk about any of that stuff. But basically, he would explain, here's what we do, here's our approach, here's how we do it. Here are the things that we've done in the past. Here are past performances. Here's our vetting criteria, so on and so forth. Then what he would do is at the end of that call, he would say, great, so that's so awesome. Now we're going to hop off of this call. And what I want to show you is, I'm going to send over to you redacted K1s from our investors. So, go and review that on your own time. I don't want to be looking over your shoulder. Here's proof of actual things we've done with clients. Then after that, he would follow up about a week later and say, hey, how are the K1s? And then that would begin the conversation of, oh, super good, blah, 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 blah. And he would do great. Final step, and that is, let's hop on a 15-minute call for your investment. And then on that 15-minute investment call, he would then be able to close them into collecting the capital. Now, in this model, these are the changes that we made from a workflow, from a sales motion perspective. We put these things in place. So if you look at this, we were able to go from a 3-hour call over the course of weeks to one 30-minute, one 15-minute, 45 minutes of calls over the course of a month, like tops, like the very most it was a month. Typically it's over 2 weeks. Then we were able to, from him meeting them up here to him getting the capital committed, he was able to get that done in, on average, like 3 weeks, which is still better than several months or even a month, right? Just by doing that, just by reframing how we look at this sales process and feeding them as much information that they needed before they talk to him. That way, by feeding them this information beforehand, when he's talking to them, it's less about me, or rather the opportunity, it's less about trying to convince them, and it's more about like, let's just kind of understand and like walk through this together. So by doing this, we were able to help them raise $3 million over the course of time. We didn't change anything else in the business. Nothing. Everything else is the exact same. We did not change a single thing. But by doing it this way, we were able to get the criteria of $200K per person, $1 million per fund, and $3 million over the course of the time. Now, here's where it got really good. And what we did is, because of the way that we did this, when he got them to commit the capital, he would ask them one very simple question. Great. Who in your network would potentially be interested in something like this as well? And what we found in doing this is 1 in 4 people had someone who wanted to, or who had money available. Because again, a very common thing is people who achieve a certain level of success, whether it be money, whether it be skills, whether it be athleticism, call it what you will, even looks really, they tend to associate with more people like that. So by asking them a question of, great, who else do you think would fit this investment opportunity? we were able to generate leads on our behalf. And the sales motion was super simple. Hey, if you know someone, tell you what, just connect us in a three-way text. You, me, them. Let's stop. Or rather, let's take a picture on this call right here. Boop, me, you. Well, there's no one here right now. It's just me, myself. But imagine you're on this call with me, and I take a picture of it. Hey, hey, John. Just had a conversation with Matt about a big opportunity that we're investing in the real estate space. Was wondering if that's something you'd be interested in. And then Matt, who was on this picture with me, would say, hey, just talk with Kajana, super cool guy. Matt, I think it'd be a really good opportunity for you. That's all we did. So by doing that, there we go. By doing that, we were able to get the people who already committed capital to then generate leads on our behalf in order to bring people in. And in doing that, we were able to get more leads without him having to do, I mean, he still did networking events, don't get me wrong, but he didn't have to go and start paid advertising. He didn't have to go and start cold outbound. He didn't have to go work with agencies, none of that. All he did was, for every person he talked to, he would ask them, hey, do you know someone who would be a good fit for this? And 1 in 4 people, well, everyone said yes, but 1 in 4 asks would result in a new qualified lead going through this process. And that's about it. So that is how we helped a real estate investor raise over $3 million over the course of 12 months without doing anything else in your business. Now, if you are a real estate investor, what I would really hope, or any type of fund manager, someone who's, generating funds, well, let me go back to it. Take a screenshot, like for reals, like right now. Let me just stop right there. Then move it over a little bit. Boom. Take a screenshot. This is something you can implement by yourself. It's not particularly difficult. You just have to know who you're talking to and what makes a great lead versus just a qualified lead versus an unqualified lead. Bare minimum, are they an accredited investor? Because if they're not an accredited investor, they can't invest with you anyways. Obviously, there are some areas in which it's not the case, but that's not the case. But let's talk in broad strokes right now. So obviously, they're an accredited investor, they can. But other things you want to ask is like, how much money do they have available? What other type of investments have they put into? What is their risk profile? How long are they looking for a return? All of these things help you to shape up who's a really qualified lead to buy versus someone who's just qualified to buy versus someone who's not qualified to buy. So if you can understand and map that out like a 1 hour activity, you can go and map out who is super qualified versus not. Those all become the questions inside of your intake form. And then after that, knowing that you've had conversations with people you're trying to raise capital from to date, which means you know what kind of questions people constantly come up with. So you then put together a little very brief deck, 5 slides, 8 slides. You go and record yourself going through them, explaining them. Because if you can answer all those questions before they even hop onto the call, then you have already solved all of those. That way when they hop onto the call, you're just working on trust me specifically, Kajana as a person, or you, Jonathan, White, John Doe, as a person. Which makes it much easier because all the data around the thing itself is done. Then when you give them the K1s, they're like, oh yeah, I can see how this all works, and you make it done. You can do this by yourself very easily. It's not very hard. I mean, unless you're completely technically illiterate and you can't write or type, which would be very difficult in today's day and age with AI available to you. You could build something like this in less than 8 hours, 10 hours, and the return, the leverage it will create is fucking ridiculous in comparison. But of course, if you're like, that's too hard, I can't do that. Well, guess what? I can help you with that. Down below, we have a link. You can schedule a growth call with me. On that call, we're going to look at what's the bottleneck stopping your business from growing. And then we can look at what would look like to deploy and what's the actual monetary gain, as well as the time savings and whatnot that makes this the most leverageable opportunity. Because something I want to point out, right? Let's go back to this screen real fast, is that this system may or may not be the highest leverage activity or system we can put into your company. Maybe you have a different problem. Maybe the problem is that the people who are coming through are only putting in $50,000. Maybe the problem you're having is that of every 10 people you talk to, 10 of them are qualified, but you can't get them to commit. Maybe the problem you're running into is that of 10 people, 0 people are qualified. I have no idea what the actual bottleneck is. It changes from business to business. But this is a system that we could build relatively simply if this is the bottleneck. And if it's not the bottleneck, we'll figure out something else. It's very straightforward. Anyways, with that being said, thank you so much for your time. Really appreciate it. I hope you have a great rest of your day, and I will see you around the internet. Later.